I request to past chairman C. Baban Dange to welcome our speaker C. Sudhir sir by offering Bhakti Shakti Momentum. I request to Vice Chairman Sir Pankaj Patni sir to please offer CABF receipt and a flower. It is my pleasure to brief introduce about C.S. Sudhir sir. Sir has become LLB FCA aged 38 years. He is a core partner, Hiregange and Associates, and heads the Hyderabad branch, which provides consultancy, audit and litigation services in indirect taxes. Sir completed his schooling and graduation in Bangalore and qualified as a chartered accountant in November 2006. Done his entrepreneurship development program at Indian Institute of Management, Ahmedabad, and LLB at Osmania University. He has contributed various articles for professional institutes like Institute of Chartered Accountants of India, Institute of Cost Accountants of India, and Trade Journal, Service Tax Review, and Money Patra. He is the master trainer for the Institute of Chartered Accountants of India, New Delhi, and a faculty in National Academy of Customs, Excise, and Narcotics, which trains the departmental officers, presented papers in various trade forums like ASSOCHEM, KSCAA, FTCCI, YIAP, Plastic Manufacturing Association. He has been a visiting faculty at Vauxhall Business School, BITS Pilani. He has joint authored 4 books on GST and service tax for a national, which are practical guide to GST on real estate, published by Bloomsbury GST Traffic by Bharat, which is published by Bharat Law House. He was part of the Hyderabad study group on GST formulated by ICAI and contributed for the preparation of background material on GST for training the CBEC officers. He has presented papers on GST in various forums. He is a management committee member of FTCCI, chairman of Indirect Taxes Committee of FTCCI, member of Grievance Redressal Committee, Hyderabad, and past member of Regional Advisory Committee of Central Excise and Service Department, Hyderabad. With this brief introduction, I would like to request to Sudhir sir to please take the charge of the session.
Thank you, madam, for my introduction. Good afternoon, all. Everybody's afternoon doesn't seem to be good. Good afternoon.
Good afternoon, sir.
Good. So I have to do this because I am taking the important part of the real estate, okay, which is unsolved puzzle, okay, which is on the joint development agreement, right? So I want all your attention so that you will counter me whatever the different interpretations which has been possible. So as Sanket was telling, this is an area of real estate. Na? You take up GST, there are many sectors. But I have not seen 2 consultants coming to common view in real estate sector. All other sectors possible. Real estate, no, not possible. So there is more than one view. So why is it so? There is a reason for it. When goods and service tax was introduced, okay, it was supposed to be a common tax. Without differentiating goods or services, a common tax should have been brought in. But the way it has been drafted, again there is a definition of goods, different valuation for goods, different value time of supply for goods, different place of supply for goods, and different for services. So it's a common law written for goods and services. Goods and services are not treated same, right? So now they drafted the law keeping, when the goods they wanted to keep, they drafted the law keeping a trader in mind, a manufacturer in mind. When drafted for the law for the purpose of services, they kept a pure service provider like a chartered accountant or a consultant or an architect, where there is no involvement of any material or something. They kept them in mind and drafted everything toward the services. But what is real estate? All that they did is adding a serial number 5, and they say for the purpose of GST this is deemed to be a service. A real estate transaction which is having immovable property, goods, services, all three put together with one sentence. They told you read everything applicable to service for this transaction. So the logic will not be clear. Might it be your valuation, might it be your time of supply. There is no logic which is coming out very clearly. So what should have been done? This was my recommendation in the white paper also to the CREDAI National. What has to be done here is that you need to treat real estate as a separate chapter. You have to look at the levy from a real estate transaction. You have to look at the valuation from a real estate transaction. And then you have to, when you draft, then a lot of these differences get ironed out, because you are specifically giving that what is the time of supply or evaluation for this sector particularly. So they are using the aid of various FAQs. As Sanket has really clearly told, FAQs are of no legal use to you. Right? FAQs is only used when it is favorable to department. That is when the department is going to refer it. If it is not favorable to him, he will not refer. Clear? So they are using this, but what should have been come is what is there in the law. So that is the missing link which I see as far as a real estate transaction is concerned. And nothing much to worry. This is giving a speed for all of us, lot of consulting opportunity, lot of litigation opportunity. So although may not be the right thing, but okay, it is keeping us busy. What, Sanket? Right?
Lot of seminar opportunity.
Yes, yes. Right? So happy to be here to the branch. I think it was in 2019 we did the same topic. So after all this COVID and all this virtual, it is very good to have again a physical seminar, and happy to see such a large audience being here. So the topic which is given to me is to cover on a joint GST implication on a joint development agreement. So there is a specific requirement which has been given for me to cover the joint development scenarios into three different things. One is under the service tax, pre-2019, post-2019. So I'll also explain what exactly the changes have been happened and why there is a differentiation which has been required here. So that is something which I will be covering. I will also be touching on the lease transactions and the TDR, FSI, things like that. So that is also something I will be taking you through. So let us understand this entire flow properly, because this is very much which is required. One fundamental what we need to understand here, which I am sure most of us sitting in this room will understand, but not our clients who are a real estate developer are still failing to understand. They are trying to get the hold of it. Is that GST is a tax on a transaction, it is not a tax on immovable property. Right? So this is very, very fundamental, which you need to look at. So when a same goods is being sold by a manufacturer to a distributor, distributor to a wholesaler, wholesaler to a retailer, retailer to a customer, every chain there has to be a tax which has been there, because there are multiple transactions, although the goods dealt is same. But many of the cases, inevitably, we have challenges in convincing our client who is a developer. He says, on that flat he has already paid tax, why should I pay? He has paid for his sale. What you have handed over to him is a separate transaction which you have to again pay. Right? So that is how this transaction is. So I have divided into the multiple transactions. So there is one transaction which happens from developer to landowner. So what is developer is giving to a landowner? As of now we will call it as a built up area. Okay? Before we conclude whether it is a taxable service, liable or otherwise, a built up area has been handed over to landowner. Certain percentage has been mutually agreed. What is landowner giving to developer? Is it a development right or it is a immovable property? Development rights. We are all same with the development rights. Okay. For a moment, we will conclude this is a development rights. I have a different thought. I will come to it as and when I take up that particular transaction. Right. So this is two transaction which is happening, and both the transaction is not happening for a cash consideration, money consideration. It is a barter of two transactions which has been happening. Right. So how much tax has to be paid? How many tax has to be paid? Two taxes or one taxes? Two transaction, two tax has to be paid. There is another interpretation altogether for it, which we have taking in the one of the arguments which we are placing before the Telangana High Court, where we are challenging this two, that the development right should not be subjected to tax. There we are taking an argument. Please look at the scope of supply definition. Scope of supply definition says barter. Sale, it says barter. It is not mentioning to transactions in a barter transaction. It is not mentioning like that. If they are saying barter, what is the definition of barter? Two exchange. This two exchange has been treated as one scope of supply, specifically included. So tax may have to be paid only once, may not be required to be paid on both the leg. This is also an argument which we are taking. I am not very sure whether Telangana High Court will agree for this particular argument, but this is something which I am giving you as a professional. You should be knowing this particular argument. But if you ask me my personal view, that two transaction, two tax has to be suffered. Right? Next, there is a transaction between developer and customer. I think this is what something which has been substantially covered by Sanket. He has done a wonderful job in highlighting various issues which is there in this, and he has done that. So that is something which is not, I am not touching on that particular transaction. Then there is also a transaction between the landowner and the customer. Right? So that is transaction number 4. There is also a contractor or various vendors. Either it could be one single contractor, or it could be a steel vendor, it could be a cement vendor, it could be a labor contractor giving a services to developer. Then there is some land vendor. It could be a land which has been purchased, or it would have been acquired by inheritance, whatever it is. There is a land which has been given to the landowner in some source. And if you look at this particular color, how it is going, so the land which has been there, which is coming here, partly will go to his customer, partly it goes to developer. From developer it will pass on to his customer. So that is how the blue line is working. If you look at this construction service which is taken by the developer, it is partly going to landowner, which is again transferred to customer, and it is partly going to customer directly. Right? So input tax credit is available only in this direction of black or in the direction of blue. That means to say black against blue is not possible. Just I am keeping here for a while. When I come to this particular explanation, this is what something I will be highlighting. Are we good with this entire transaction? We are all very clear with the fundamental of what is it. Okay. So now, as I told, in my personal view, there are two legs. So I am going to discuss on the both the legs, unless until we see if there is any other views which is going to come. The first one is the construction of flats for the taxability on the landowner's share of flats. That is, whatever the transaction number 2, which is transaction number 1, which has been flats which has been handed over by the developer to the landowner. So whether at all it is subjected to tax. So what is your view? It is subjected. So do we have any grounds to say why it is not subjected to tax? Sanket was giving one beautiful theory of accretion. In the same chart, if you look at who has done the construction, right? So why developer is doing it is only a contractor giving to this customer or contractor giving to this landowner. Is there something which we could argue? Something which is open as of now, no judicial precedents on that, right? So one of the things which we have to look at is that whether this is a construction service which has been provided or it is an exchange of immovable property which is happening. Right? So that also comes to one discussion on the service tax regime case in case of Nagas construction. Nagas construction in case of Guwahati High Court. Very interesting judgment, single member bench judgment. Of course, that was nothing to do with the development and developer and the landowner. That was something to do with the customer. So this company had not registered for service tax, telling that I am not liable for service tax. Department issued a notice. They gave a letter, not even notice. They gave a letter saying that you have to take a service tax registration. Based on that letter, they went to Guwahati High Court saying that when I am not at all liable, why should I take the registration? Then the court told you explain me how you are not liable. Then Nagas construction gave a argument. See, my modus operandi of working is like this. I enter into a document called as an agreement of sale. And I am not entering in any construction contract with my client. I am entering into a document for selling an immovable property. Agreement to sell a immovable property. After this, I am doing the construction. By AOS, my customer is not becoming a owner. Will he become an owner? Unregistered AOS, will he become an owner? Answer is no. He is not becoming an owner. I am not disputing there is no construction. There is 100% a construction which has been there. I am doing the construction. But I am laying the brick, I am putting the cement on which land? Who is the owner of the land? I am the owner of the land. Right? So the service of construction has not been provided to my client, it has been a self-construction which has been done. When my customer will become an owner? After the entire construction is completed, he pays me the entire amount, I am executing a sale deed. After executing the sale deed, I have not placed even a single brick on this property. So thereby, what I have done is a transaction of immovable property. I had agreed to give an immovable property. After the construction has happened, I am transferring the immovable property. No service tax should come. Right? Guwahati, I told wonderful argument. I agree with you, and they gave a decision in favor of the assessee. Right? And something which is rare happens, okay, rarely some miracle will happen. That miracle happened was department accepted this case. They gave 108 circular saying that this is right, so no tax to be paid. Then there was a lot of thing because the entire real estate sector is going out, huge revenue loss. Then they formed a committee. Then they gave an explanation to this construction service definition. It was a positive list of taxable service, whatever I am talking about. Prior to 2010, I am talking about this issue. Positive list. 2012, the negative list came. Positive list of taxable service. They went and inserted an explanation. Saying what? I am not bothered who is the owner, who is the receiver. As long as you are taking an advance prior to completion certificate, it is deemed to be a construction service provided to the customer. If you are not taking a single penny up to completion certificate, you take after the completion certificate, then I will not touch you. I will treat this transaction immovable property. I will not collect service tax from you. Then there was a decision of GS promoter on the explanation validity. What is an immovable property? By explanation, can you make it as a deemed service? GS promoter High Court upheld what is right is correct. In fact, if you read the GS promoter decision, it actually contradicts the Mangas construction. Even without explanation, it is taxable is what GS promoter says. Anyway, that is a different thought process. But they validated it. And thereafter from 1/7/2010 only the tax was collected. Why am I telling so much history? Why I am telling so much history under GST is, if you remember, initially when the section 9 was given, it was having two portions of it. One is they told what is levy. Second, they told whatever is covered under schedule 2 is deemed to be a supply. Yeah, I think it is there in the scope of supply, not in 9, it is in 7. So they made it into deemed to be a supply. Later they brought a retrospective amendment, they told, no, only merely something is coming under schedule 2, that will not become a supply by itself. It has to satisfy the supply independently. After it has satisfied the supply, to classify whether it is a goods or service, it is read schedule 2, that's all. Deeming fiction was removed. Now this explanation deeming fiction what I am talking about, the same wording is written where in GST? Schedule 2, which is not a deeming fiction anymore. So it has to satisfy the scope of supply by itself to be under a tax. So there, for the scope of supply, can I always say this was not a contract for construction. This is a contract for handing over the built up area, which is an immovable property. So the transaction in immovable property, GST doesn't have a power to tax it. So this is one open argument here. There are certain negatives for this particular argument. One negative is, as I told in Mangus construction, owner was myself. In this case, who is the owner? Landowner is the owner, isn't it? So every brick or something is going into his custody. So that is one negative for this particular theory. But same theory you can use it for your customer. What am I talking? That can be there, right? So this is something which you can look at if at all you want to challenge it, right? So this is whether it is a service at all. I am giving this view that this could be challenged, use it for litigation. But if any client is coming and asking, should I pay tax? You tell yes, you have to pay. Right? Because my view, it may hold or may not hold. But today my duty is to give you the thought process which is in existence. Because somebody else will take this, your client is going to tell, अब मेरे को बताया नहीं है ऐसा कर सकते हम. Right? So as an advisor, we should tell that this is also possible. आपको litigation में क्यों जाना है? Right? You have to do. Then the developer says, two things will be there. One is he'll be able to collect from the landowner. Right? So there always take a conservative step. You said it is taxable, collect करके pay कर. Okay? And at least in Hyderabad or the south where I come from, this percentage is only 5%. Where you will be able to collect it. 95% they are paying from pocket. So if you are paying from pocket, anyway money is going to go from you, and if you want to litigate, these are the grounds which is available to you. Right? In addition to that, there is one more decision of Vasanta Green projects. This is also again a very, very tricky decision which has been given. Vasanta Green projects is purely under a joint development agreement. Typical joint development agreement, sharing ratio is there, area built up is there, everything is there. Show cause notice was issued, you pay tax on the built up area handed over to the landowner, you have to pay service tax. Right? Vasanta Green projects took an example. Sir, please understand my business first before asking a tax. Okay, I will understand the business, you tell me what is your business. So cost of construction per SFT for me is 2,000 rupees. And I have 50% share with landowner and myself. Right? So 2,000 cost of SFT construction of my built up area. 2,000 rupees which I am giving off to the landowner. It makes 4,000 rupees. 1,000 rupees I am adding for administration expense, interest expense, my margin, everything put together. On entire 5,000 rupees I have paid service tax. Now when I have paid service tax on my sales at 5,000 rupees, has it not included 2,000 rupees cost of construction of the built up area given to the landowner? Yes. Tribunal told, can you give a CA certificate? Right. For us, what is there? We only work by books, no interpretation for us to give CA certificate. Is it correct? Yes, landowner share is accounted in the books. Yes, it is accounted in the books. We also gave a certificate. Right? Some chartered accountant gave a certificate, which is true. It is not wrong. So we gave a certificate. Vasanta Green Project told, no, you cannot demand tax again. See, they did not tell no tax. They say when you have paid the tax on your sale, the construction cost of the landowner is already included in this, so you need not pay it again. Second time payment is not required. That is the decision which came. So only challenge is that if I have some unsold inventory, which I have not offered to service tax, to that extent Vasanta will not save me, I have to pay tax. Right? If I am paying off everything is pre-OC, I am paying tax, Vasanta decision is holding good. This tribunal decision of Vasanta projects has been appealed by the department. Supreme Court has admitted the case, has not given a stay, has not granted a stay. So the matter is pending before the Supreme Court. Now the questions. Will this apply to GST? This is a service tax case. Will it apply to GST scenario? Forget about your valuation, provision, section, terminology. There is nothing here but logic. He has not referred to even one section in the law. He has only gone by a logic. That logic, other service tax regime or GST regime remains the same. So it should equally apply for the service tax regime also. Right? But presently department is not accepting, then and also that is a service tax matter. In service tax the definition is gross amount charged. Here it is transaction value. These both are not same, so I cannot apply this decision. You have to pay GST on this. Vasanta will not come to your rescue. So that is the department view as of now. So there are a lot of litigations which is happening as far as Vasanta Green projects. What do you think? Vasanta Green projects is a good law? Why?
There are basically two transactions only.
You can take your seats, no problem.
Basically, it is two transactions happening.
Correct.
But it is one contract. Therefore, it is not a very
Correct, sir. Thank you. Why it is not a good law is, assume I am a trader, I buy 10 goods, okay, at say 10 rupees each. I am selling this same goods at 15 rupees, adding 5 rupees margin. If I sell 8, has it not covered the entire cost of 100? Right? Entire cost of 10, it is already covered, right? So that means to say, once the cost is covered, the balance 2 I can sell without GST. So GST is nothing to do with your cost. GST is the value of what you are giving a supply. So value what you have created of that particular supply is 5,000 per SFT of your share plus 5,000 SFT of the landowner share. That is the value you have created by your construction cost of just 4,000 rupees. You have created an upper value for it. So thereby the tax has to be paid. A. B. There is a land component which is there. Right? Tax was not paid on the entire 5,000 and abatement towards the land was taken. That is also something which is missed in the Vasanta Green projects. But we have to wait and watch how Supreme Court is going to look at. But any pending litigation, you want to take benefit of section 73 instead of section 74, use this case laws. This interpretation and this case law tell that no, you didn't tell there was no interpretation at all available. I was under bona fide belief Vasanta Green projects is going to apply to me. Thereby you cannot apply 74. I am ready to pay under section 73 subsection 5 with interest and no penalty. So this will 100% help you in that case. Right? If you actually want to pursue Vasanta Green projects, you have to make your own case and fight it out. So that is on Vasanta Green projects. Then the another question which comes up is, many builders come and ask, sir, if I am selling the flats to my client after completion certificate, should I pay GST? What is the answer? No. No sir, don't worry, don't pay. Sir, I am getting one doubt. Even in landowner share also, I am not handing over single flat prior to completion certificate. I am giving only after completion certificate. So why GST has to be paid there? Right? Have you faced any such questions from any of your developer clients? Yes. Almost everybody will ask that. Right? So what is the logic which we are missing here? What is the department view here? Department is saying, to the extent of the landowner share, you are not developer, you are a contractor. Right? Because my land, you are coming and doing a construction. For a contractor, I would have paid in money. Instead of paying in money, I am paying in kind. That is your development rights or land, as the case may be. I have done. So that is the only thing. So tomorrow L&T cannot come and tell that tax is not leviable. Right? So that is the logic here, and thereby I am not for this particular logic, and tax has to be paid on that. Should the GST be paid by the builder even if the landowner is retaining the flats? Right? So this is also a common question. So landowner is not selling, sir, should I pay the tax? Transaction number 1 is immaterial of your transaction number 4. Right? If landowner is selling, he has to again pay and he will be eligible to take the input tax credit. Right? Who has to pay tax? So this is again a dispute which will come. Actually, this is dispute beyond the GST department and the SSC. It is a dispute between two parties. But inevitably, because we are chartered accountant, we are giving them the advice. This is something which always come to us. And the biggest challenge which happens, you know what happens? When both landlord and developer approaches you. No, either way, different way. Separate clients. Both are our clients. That is the biggest challenge. Right. So, initially my founder partner Madhukar was very clear. Either you advise developer or you advise the landowner. You decide, don't advise both. Then I countered him. Sir, aisa kaise ho sakta, sir? I am not telling anything wrong. Na? I will tell what is the law. I will tell the same law, whoever is coming. What is wrong in that? He told, okay, there are some finer aspects. You will give that, okay, this is also possible. This is also possible. That is the challenge which is going to be there. So I had certain challenges of doing this. In one assignment I understood. My founder partner was always right. Right? Seniors will be right, but we will always test them and accept. So that's the problem. So I tested and later accepted it. Later, to my fate, my two independent builder clients, all of a sudden they came together and did a joint development agreement. He is also retainer, he is also retainer. Then you cannot say, no, whom to choose in this? Right? So sometimes you inevitably get stuck. So these are those clauses which is going to come. Who has to pay tax? For the purpose of department, it is immaterial from whom you are collecting or whatever it is. They will give a show cause notice only to the supplier of the service, who is a developer in this case. Now, whether the supplier can recover it from the landowner, it is a pure contractual obligation which you are writing. That is a problem, no sir. We have not written anything. If it is not written anything, as a generic law, it says an indirect tax is something which is recoverable by the customer. You have to take it. There is one rental related one case law is also there, where they say if your agreement is silent, it is a service tax, is a consumption based tax. So it has to be paid by the recipient to the provider. So that is something which they have told. But very important that any contracts, new contracts which you are doing, you ensure properly who has to pay the tax. Right? Otherwise, this is going to be a lot of dispute between the landowner and the developer. Next, are we clear so far as the levy and those provision is concerned? Right? So now I am coming when the tax has to be paid. If you are because I have concluded tax has to be paid. I have given you a grounds what you can argue. So when the tax has to be paid. Now this is again a tricky thing which is going to be there is because you have to ask a lot of questions, right? So in GST, I was earlier to this chat GPT and all, we also thought we need to do some sort of a bot which is going to answer all the questions. So we were speaking to developer. Then I told, one of the challenge with the developer told is, Sudhir, in this what is the problem na? If the user is asking one question, you have to ask him 10 questions to answer that one question. Right? So you have to, okay, when is the due date for filing the returns? Then you have to ask, are you in quarterly or monthly? Right? Which state you belong to? Right? All those questions I have to ask, then only I will be able to come to some conclusion. Of course, ChatGPT is doing a better job. It is giving a better answer. Different technology. But there is a challenge. So here also, when it has to be paid tax, then we have to look at 3 different time frame for this. Joint development entered from 1st of July 2017 to 24th of January 2018. So what is this 24th January 2018 relevance? Because 25th onwards there was a notification 4/2018 which came in, and they told specifically a special provision under section 138 saying that when the tax has to be paid for this particular transaction. They made it very, very clear. Right? Then this was again, an explanation was inserted, and they told all joint development agreements entered after 1st of April 2019, this notification will not apply. Then which notification will apply? 6/2019 notification will apply. Right? I know few people are curious to ask me a question. Sudhir, what will happen if the joint development agreement is prior to 1st of July 2017? Right? I've covered that in my PPT, but not at this slide. I'll come to the last. Let us understand only the GST scenario. Then I'll give you a mix of service tax with GST. Right? So now, 1st of July 2017 to 24th of January 2018, because of lack of specific circular, you have to pay the tax based on section 13, which is giving you the time of supply for services. Right? What does it say? It says at the time of issuance of the invoice or receipt of the payment, whichever is earlier, you have to pay the tax. And it says if you have not issued the invoice within the period which you are supposed to have been invoiced, it is the provision of service, date of provision of service or receipt of money, whichever is earlier. Right? So now we need to look at when the invoice was supposed to be given by this person. Have you seen any invoice which has been given by developer to landowner?
Demand notice will be served as.
Demand
notice will serve as.
But we have not seen a tax invoice, right? Generally they don't issue. So invoice is not issued, leave it. Now we have to look at when the invoice was supposed to be issued. Now this agreement between the developer and the contractor, can it be a continuous supply service? It cannot be continuous supply service, because for continuous supply service there has to be a payment which has to be done on a progressive payment should have been done. In this case it's all non-monetary consideration, no progressive payment. So it is not a continuous supply service, it is one-time provision of service. Right? Because it is a one-time provision of service, the time of supply, the invoice should have been at the time of provision of service. Now the question was coming, when is the date of provision of service? Is it at the date of joint development agreement? Or is it at the time of completion certificate? That is when I have completed everything and handing over to you. And we were also discussing post completion also there are work to be done. Only final key when you have signed off saying no more work, no more expenses accounted in my books of account, is that the date for the completion certificate is there. So obviously assessees were telling that is the date, department was telling joint development agreement is there. So lot of confusion and chaos were happening here. In my view, you can defer it up to the completion certificate. You can say that is when the provision of service is completed, because as on the date of joint development agreement, it is illogical to say that I have provided the service to you. Right? Even if it has to be a look at deficiency of service, completeness of service, nothing can be measured. It can be, all those things can be measured at the time of completion certificate, and that is where you have to look into it. Consideration is there.
Consideration is.
Wonderful. Wonderful. Sir is saying, okay, Sudhir, this is done, na? But have you not got a consideration as on the date of joint development agreement?
Yes.
Then that has to be taken, na? Read the wording of section 13. Section 13, it says not the date of receipt of consideration. He says receipt of payment. Date of payment receipt. And date of payment and all has been explained. Where they say when you are credited in your bank account or you are accounting in the books of accounts, whichever is earlier. So here no money is flowing in. So that event is as good as not happening to me. It is not receipt of consideration, it is receipt of the payment, specifically written. Right? So you have to be careful there. Right? Next, to come to a conclusion of this, they told we will solve this issue and they bet 4/2018. And 4/2018 is nothing though, this was a replica of the previous circular which was there in my service tax regime. What they told, they are talking about two things. One is when the transfer of possession or transfer of right in the constructed complex by entering into an instrument, complex deed or a similar instrument, example allotment letter. This is what they are saying. Now you tell me when the possession will be handed over? After completion, 2025. Okay, everything is done, no more books expenses, everything is there, that is when the handing over will be there, a formal letter will be given, keys will be handed over, that is when the handing over will happen, possession. Second, when is the right in the constructed complex which has been given? At the time of allocation agreement, right? First we will do a joint development agreement, where we will say 45-55 or 50-50, 60-40, whatever is been agreed. Then we will go for a permission. After permission, we know that there is an inventory of 100. Out of 100, 45 belongs to you. Balance 55 belongs to me. Which 45 belongs to you? You enter into a supplementary agreement or an allocation agreement. Sometimes it is registered, sometimes it is not registered. But this is the document when I get a right over that unit. That is happening when? Today, 2023. And they are telling I have solved this problem. You are telling two different things. One happens in 25, another happens in 23. When should I pay tax?
25, 20.
Okay. When will we use this word or? Two scenarios will use this word or. One is you are referring to a synonym, right? When two synonyms you have been referring, I am not able to get any word like that. So two synonyms when you are referring, you are going to use this word or. The other thing where you use the word or is that when you give two options, either you go with one or you go with two. When you give two options, this is applicable, or it has been synonymously used. When you are saying either this or that, both are same, you pay on that. So because these two are not synonymous, 4/2018 in my view has given you an option. You either pay on this or pay on that. When two provisions is, two interpretation is applicable, the view which is beneficial to the assessee has to be taken. So you decide which is beneficial to you. If it is completion certificate, you pay on the completion certificate. But even now there are a lot of show cause notice which department are giving on the time of allocation agreement. And surprisingly, for all the service tax cases, they are taking completion certificate. Conveyance or the completion certificate, because that is happening under the GST regime. Right? So there are two types of things which is happening. So any whatever you do in this area, you are going to get a notice. Somewhere you are going to start. Yeah.
There is constructed premise.
Constructed apartment.
Which can only happen at the
So constructed, a right over a constructed, I need not wait for the construction to happen and get a right. I am getting a right today of a to be constructed apartment only. But rightly told by him, department is saying, no, Sudhir, 2013 whether your construction was completed. No, when how can you give a right on the constructed apartment? Your constructed apartment right has been given later only. So that is what I am saying, but I can give a right on a to be constructed also. So that is something which we have to do, but I completely agree, department is of that school of thought. So now, finally, 1st of April 2019, they actually removed the ambiguity, right? They have told you pay the tax on at the time of completion certificate or at the time of first occupation, whichever is earlier. Now, what is meant by completion certificate? What is meant by occupation certificate? OC, right? So I am not getting into this topic because Sanket has told we have unanimously decided OC and CC is same for Pune, right? So I am not getting into this particular topic. But what is first occupancy means? I also saw the slide of Sanket where first occupancy was telling that you take the housewarming photos, you take the electricity bill and all those things, right? I think that was what you are told. I did not hear, but I saw your slide.
We had a discussion.
Yeah. So if you are taking that, you can say that okay, occupation is there. So one of the builder client in 2019 when he came and he wanted to understand what it is, then he told, sir, मैं विला प्रोजेक्ट बना रहा हूँ सर 240 विलास है, मेरे को शो विला कैसे भी बनाना है दिखाने के लिए, तो मैं एक काम करता हूँ शो विला करके मेरा मैनेजर मार्केटिंग मैनेजर को अलर्ट कर देता सर, उधर ही रहता फर्स्ट ऑक्यूपेंसी हो गया ना, पूरा प्रोजेक्ट में क्लेम कर सकता हूँ सर. Technically, strictly speaking, why not? Yes, you can do. But I told you it's not the logic. That is not the reason why they have given. The reason why they gave first occupancy is that there are n number of municipalities in India. When I apply for occupation, in my lifetime I will not get, my son will get. Right? Because of their own way of working, the corporation way of working, or maybe I have a deviations, very interpretations, various things are there. So there they are not able to give the benefit of the immovable property transaction which is happening to considering that they have done this. So don't get into that loop of saying that okay, one flat I will allot or one villa I will give and they'll take the entire construction. And Sanket told clearly, partial completion you have to look at the project. So only to this extent completion is there, you look into it, balance is there. So all those things are there. But that is when you have to pay your tax, right? So just to summarize, if your joint development agreement is prior to January 2018, right? In my view, you can postpone it up to completion certificate, right? 4/2018, that is something which is in January 18 to March of 2019, if you are entering into that, right? There also you can go for completion certificate. 1st of April 2019, without any litigation, you can go for completion certificate. So in all three, it is possible you can go for completion certificate, but first two you will end up getting the notice. Last one you will not get the notice. Clear? Then on what value you have to pay the tax? So here the valuation, if you look at, I have given only two period of valuation here, up to 31st of March 2019 and after 1st of April 2019. So up to 2019, the tax was supposed to be paid on the transaction value, and if it is not for solely for consideration in money, then you have to go for a valuation rules. So valuation rule number 27, what it told, the valuation has to be the open market value of the service what you are giving. So what is the service I am giving here? Construction service. So how will I determine the open market value of my construction service? How can I do that?
Contractual obligation. Contract with the landowner is there.
My contract with the landowner is there to give you a constructed apartment, specification is fixed. You have to tell, okay, this luxury apartment,
Value is ascertained by
stamp duty, yeah, this is something which you could look at. But department is a, stamp duty is a guidance value. What does that say? The valuation cannot be less than this, sir. That is the reason they are giving you a benchmark. But they are not declaring that this is the valuation. It cannot be less than this. If you are making any trade beyond that, you have to pay valuation, stamp duty on higher value or guidance value? Higher value. So thereby I will not consider this. So another idea which is coming in is, I will do one thing, I will give the entire drawings.
Sir,
Yeah.
stamp duty is calculated on the basis of the services given by the developer to the landowner.
Completely agree on the guidance value.
For development
Adjudication
agreement,
Correct.
there is a
Now
specific adjudication
adjudicating
process
authority
which
is
happens in
valuing it.
Maharashtra.
1 minute, sir.
Now adjudicating authority is valuing it,
Perfect, sir.
and they are giving this value.
Wonderful, sir.
And they consider into the cost of construction is taken, land value is taken, and whichever is higher, they make a value for the stamp mark.
Wonderful, sir. This is what you are also saying. Then in this case, if the evaluation has been done through an adjudication, it has been done by a government officer, right? I don't see that it can be challenged. You can go straight away go and do that. But in our state of Telangana, we don't have any such mechanism which is happening. There is a guidance rate. You compute based on the guidance rate and pay your duty. No adjudication, nothing.
Land development agreement is compulsorily adjudicated.
Where you apply, giving the formula that according to this formula, these are the three adjudications which are there. When you put up a file for adjudication, the officer adjudicates and confirms that yes, higher of the three, this is the correct formula, and then
Completely agree with you. So Maharashtra problem is solved. Whatever the valuation is there as per the joint development agreement, you adopt it 100%. You should do. Very, very strong technical point is that whenever there is a litigation is happening, okay, when you are going for a litigation, appeal, writ or whatever it is, you have to make two parties. Who are those two parties? One is central government, another is state government, right? Now the state government will it come and argue? No, my colleague, what valuation he has told is wrong. Same, na, state authority. Your own government department has come and told that this is what it is. So state government cannot go beyond. Once the value is fixed freeze for the state, center has to adopt it. They cannot say it's a different value. So it's a very beautiful mechanism which is happening here. You could go. But if your projects is other than that, then the challenge will be that how do you determine the valuation. So if you are not able to determine the valuation, you have to take the valuation of the land what you are getting. If that is also not possible, then you go for cost of construction plus 10%. 1st of April 2019 onwards, they have mandated you to take the first sale in the project. First sale in the project. Now the first sale, can it be the sale done by the developer? Or can it be also the sale done by the landowner? Anything. Anything. Why this question is specifically asked is, in general, developer's value is higher. Landowner will not sell even a single rupee more than the SRO. Right? When I am telling this, you understand that it is. It's not that he is making loss, right? So, but what is there in the agreement is not before. So that is always lesser. Okay? So that also can be adopted for this particular. Right? After adopting this, immediate question which will come is, are you eligible for 1/3 deduction towards the land? My answer is yes, you should be there, because the first sale value, you only have to take the construction service in the first sale value. You need not include the land, because in this transaction between you and the developer, developer and the landowner is already having the land, you are not transferring any land to him, so only the construction services. Then comes the another decision, Gujarat High Court decision, can I take the higher value of the land, it need not be compared to only 1/3 deduction, all those arguments are possible. Clear? So this is on the valuation. Then comes to the rate of tax, I think it's 18% and 1.5 and 12%, 1.5, 7.5 and 18%. So these are the things which is been there, I am not getting it. Ha.
If you look at the schedule 2,
Ha.
I6A,
Ha.
also distinguished. Here I am of the opinion
Ha.
that whatever services given by the developer to the landowner should fall under 5B and not 6A.
Sir, why should I go into these two clauses, sir? Either 5B or 6A, both says it's a deemed service. So for me, no differentiation.
Rate will differ. For works contract, there is 18%.
Are you meaning to say that works contract will not include construction?
It includes.
Ha.
It includes. But there are different rates. That notification fee will not be applicable my opinion, for these services. Because
Okay.
it is as good as
I got your thought process.
I am giving a contract service to my landlord.
No issue, sir. I got it.
So he's saying if till March
And
19
my
you are
contractor
taking
is
18.
billing me at 18%, I am billing at 18% on the value.
Fair enough, sir. I take your thought process. Few fundamental things. If you look at the scope of supply definition, okay, and the levy definition, they are commonly giving for goods and services or both, right? Unlike in central excise or in the customs, where the rate has been referred to Customs Tariff Act or the Central Excise Tariff Act, there is no reference which has been made for any of the tariff which has been given for the purpose of GST. In the levy, what they say, the rate should be adopted, rate as notified on the recommendation of council, based on which a rate notification has been given. Rate notification says, in case you have a classification dispute, you take customs principles to settle it, right? Otherwise, I am not bound by a levy to go to any classification things are there. So thereby, my classification of goods which comes there, I have to independently either classify or I have to ignore the classification and I have to only go by the description of service which has been given. If you read the description of service, that when am I not a promoter to the transaction of developer? Once I become a promoter for this project, I am promoter for everything. So I am a promoter doing the construction of a complex which is intended to be sold prior to completion certificate. So rate, concessional rate which has been given to me there, 1.5, should be applicable even to the landowner also. In addition to that, look at the condition in that notification, serial number of notification. There they are saying, subject to condition, your landowner promoter should have paid tax if he has to get the credit. So if we have to interpret this, serial number 3 will not at all apply for a joint development transaction, then why was the need for the provision to have the landowner promoter reference? So the intention of law is very clear. Once you are a real estate developer, serial number 3 has to be there. You are a typical infra contractor, then serial number 3 will not come because you are not a promoter as per the RERA. Then you go to the other notification and adopt 18%.
Why I am going for that is, if suppose in a city, big cities and city area, not outskirts, there the land value is more. If I take this tax, then I am paying less tax because I am.
That anyway, that Gujarat Eco decision is there, no sir, you can take.
No, that is another
Argument. Correct.
I say I am giving only contract services.
You can test it, sir.
And I have tested in service tax era. This I have tested.
You have to again do this here. That is possible.
They are saying up to March 19.
Ah.
So they are saying the valuation is
1/3.
of land and then
12. Yeah, it's in bracket 12% I should have written.
That is what we are
Yeah,
saying.
yeah.
So there we are not taking it as a contract service.
Yes.
There also we are saying it is
1/3 deduction of concession charges. Right? Done. So one thing very important, tax invoice has to be issued. Okay? For this particular transaction, at the time of completion certificate, whenever is there, you have to issue a tax invoice, and if the e-invoicing is applicable for your turnover, you have to issue a e-invoice because it will be mostly a B2B, because you would also register for further sale, you have to give a e-invoicing, which is mandatory. Right? Not giving a tax invoice will not only just attract general penalty of 50,000 rupees, 25 plus 25. So there was a recent episode which happened in Telangana department, say where one of the builder had not paid the tax on this construction service. So he was taking various other grounds, Vasanta, XYZ, barter, immovable property, all those things. So commissioner told, I'll arrest you. Then I told, very good sir, you tell me the provision, under which provision I'll arrest, because I have not collected the tax or I have not given a bogus invoice. He said, no, you see one particular provision, I think B or C something is there in that 132, where it says that supplying any services without issuing invoice. Have you issued invoice for this? No. Then you have supplied the service without issuing the invoice, I can arrest you. because value is more than 5 crores. Tax value. Right? But there is a circular which clearly says in interpretational issue you cannot invoke like this. Very clear. He says I will not go with circular. Then he again arrested. We have to go to the High Court. We had to get a bail, and things are happening there. But one such officer was there, and he is giving us a lot of work or giving sleepless nights to various developers. But yeah, that is what is the Hyderabad story today. But that is happening. But I am just telling that be careful that somebody can take this advantage and arm twist you. Better give up the tax invoice because generally it has not been given. Once you are paid.
He would have also said circular or absolute because there is no interpretation.
That is what he said. Where is the interpretation? Correct. That is what he says. Right? It is crystal clear you have to pay tax. Where is the interpretation? Sir, that is on the construction service, sir. 1 lakh is done so far. Right? So I am taking, I don't know if I am taking more time than what is required. Am I too slow or it's okay? Perfect. So next is development rights. So this is transaction number 2, flowing from landowner to development. Why did we conclude, sir, unanimously development rights? Why is it not transfer of land? Are you not giving a general power of attorney along with JDA? Can't he make a sale of the undivided share of land sale to somebody?
Not only that, sir. If you go by strictly by the substance of the agreement, agreements are so drafted like that it is just a sale of land or undivided share of land.
Correct, no?
Yes.
So there is always a possibility for you to tell what I have given in exchange to him is not a development right. It is a land which has been given. A land comes with a banquet of rights. Right to lease, right to use, right to develop, everything is there. So development right is also one such right which has gone to it. So what is there is in exchange of a land. Sir, let me tell you another important thing what is happening is your drafting of the contract in joint development agreement is very crucial. It is very crucial. Is it telling that I am giving you a construction service in exchange of the land? Or it is to settle your consideration of land I am giving you construction service. Does it have any relevance? You know one circular which was given for employee related thing. So what they told, any services provided to employee, if it is in exchange for his employment service, part of the CTC, it is not a service provided by employee to employer, it is settlement of his employment service given by you. So why can't I take this here? Can't I say that the construction service which has been provided to you is not taxable because it is only a settlement of my land transaction with you. You are not giving construction service to me, I am giving you a land. Land is settled by, you are supposed to pay the money, that money you are giving in exchange of construction service. I can take the shelter under the circular, but he has already told, read the first portion of the circular whenever you are referring. Department will say, no, this circular is not at all binding on me. But this is something which you can take it as a plan B while drafting your agreement. What is that you are going to lose? You prepare your client, sir, आपको pay करना है. But agreement में लगा दो, keep some cards with you. Right? So this is very important that you draft like that. Many such provisions you can put it in the joint development agreement and safeguard yourself whatever the stand which you want to take. So that is on the development rights. It can be interpreted that it is as a land sale, no development rights is given. Assuming but not admitting, it is not sale of land. Okay, it is only a transfer of development rights. Whether that is development rights is subjected to tax, right? So interpretation is like this. Goods is anything other than immovable property, right? Service is anything other than immovable property. So that thereby development rights is not goods. Thereby it becomes a service, right? So anything under earth cannot be service. It has to be within the framework. This is one. Second, benefit arising out of land is also a immovable property. All those decisions have been there. So this is also something which we could argue. So there is there is a matter which has been posted for final disposal in Telangana High Court on 21st of March on the development rights. So I am not very sure whether the judgment will be pronounced or it will be reserved, but maybe next 1-2 months we are going to get some yes or no of this. At least from the Telangana High Court we will get to know on this. My strong and strict view is that this should not be subjected to tax. It is not liable for tax.
There are rates in other high courts also.
Yes, but nothing is moving.
Mumbai, Gujarat, there are rates.
Is it moving? I was told it's not moving. Admitted and
Admitted and not.
notice to the department and left.
No, in case of Bombay High Court, the department has also made their submission.
Okay,
So it's not-
that may also come. So this two arguments are already done. Both the councils have argued. For decision, for final judgment, it has been posted on. So that means it's like final done. So these are the various grounds which has been there. I am not getting into those grounds which is liable, which you can tell that it is not liable. We have to wait and watch how it is going. For residential projects, exemption was available after 1st of April 2019, development rights, to the extent what you have sold it to your customer. Development rights what you are getting, say for example you have 1 lakh SFT and you are selling 80,000 SFT to your customer prior to completion certificate. So the development right pertaining to 20,000 SFT only will be taxable, and that has to be paid under RCM. And there is one complicated formula you have to look at, whether it is 5% or 18%. So you start plotting that formula, you will forget what exactly you started with. Why did you do CA? Right? So that is some thing is there which I am not getting into it. But in sum and substance, 5% on that is going to come, because finally that 5% or 1.5% is going to work out lesser in that particular formula when you are doing it. Commercial projects, again taxable under RCM only. All joint development agreements. So again, if you look at exemption notification, very clearly writes joint development agreements are entered after 1st of April 2019. Very crystal clearly written. If you look at a reverse charge mechanism notification, they are not writing it. Reverse charge mechanism, you have to pay on the development rights. So can it be that the triggering point, that completion certificate will come, then also the developer only has to pay, whether it will be on the landowner. So that is an open issue, but either of them has to pay. If either of them has to be paid, then we can go with that particular flow. So that is on the commercial projects. Mixed you will get a proportionate of it. So this is the notification which has been given. RCM, very important. If you look at RCM, will be happening only when it has been received by a promoter. Right? If he is not a promoter, within the definition of RERA, RCM will not come. So is there any transaction where development rights is transferred and he doesn't become a promoter? In some commercial projects where both the parties are very clear that they want to exploit it only for rent. Day one agreed that this is for my long-term savings or whatever it is, my financial security. Builder will decide day one that he is not going to sell even a one single built-up area. Landowner also will decide. In that case, they will not even take a RERA registration because they are not offering for sale. So even if they are not taking a RERA registration, it is not because of taking or not taking the RERA registration. It is not referring to registration under, it is referring to meaning assigned to in promoter. The promoter says that only when it is intended for sale. The intention of sale is not there, it will not become a promoter, in which case reverse charge mechanism will not apply. The landowner has to pay it under the forward charge. Right? This is the only exception which comes. Otherwise, generally they take a RERA registration for residential and multi-use and commercial projects which they intended to sell. That is where you can do this. Yeah.
As per division here, RERA Maharashtra in one case where the developer had said that I am not falling under RERA, I am not a promoter, concluded that you are a promoter. That was a Lavasa corporation.
My God.
So after 3 years, it concluded that he is a promoter, so all the implications changed.
In the facts which I have told,
No, I am saying in one of the case, Lavasa Corporation concluded that I am not a promoter, so I did not take.
Because he was not selling it.
Yeah, no, he was selling it, but he was saying I am doing rental arrangement for 60 years. And that's why I don't qualify as a promoter.
Okay.
Department concluded that he falls as a promoter. So, RERA concluding a case saying you qualify as a promoter has an implication under
100% under GST. In that set of facts under GST, reverse charge mechanism is going to come if it is a promoter. Right? We are dependent on RERA there because the interpretation meaning assigned to RERA as interpreted and decisions given under RERA Act has to be read along with that. Thank you for that input for me.
Sir,
Yes, sir.
is the RCM applicable on TDR purchased from outsider, not from?
I'll come to it. Is there? I have a slide. So now, I have completed both the legs of the transaction, right? In that GST regime. Now this is something to go with the service tax regime, right? So under service tax regime, if a joint development agreement is entered under service tax regime, again two scenarios. Supplementary agreement entered, allocation also happened under service tax regime. Supplementary agreement happening under the GST regime. Right? Common scenario, majority or portion of the construction has happened under the GST, completion certificate has come under GST. That is the reason we are discussing. If everything is done in service tax, there is no requirement of discussion. So, in all the scenarios, admitted fact is the construction has happened after GST, portion of it or majority of it, and completion certificate is received. Now, how are you going to treat this particular transaction? So, if you have to look at the service tax definition and that earlier circular which was there, scenario 1, you have got a completion certificate. What you are supposed to do as a service tax assessee then? Joint development agreement has been entered, permission applied, within 6 months you are entering into a supplementary agreement for allocation of it. There was a circular, all the provision was there. Everything happened prior to July 2017. What you would have done? You should have paid service tax there. You don't know what is going to happen in GST. You don't know what is a transitional provision under GST. What you want to tell under GST, you don't even know as on that date on frame because you have not crossed 1st of July 2017. So thereby this is a very crystal clear case. This will not come under GST regime. Even though the actual construction has happened under the GST regime, completion certificate is received under the GST regime because it was totally levied under the old law. So this transitional provision 141(11)(b) very clearly, if the tax was levied under the service tax regime, it cannot be asked to pay under the GST regime. Right? Second scenario. Joint development agreement has happened, but the allocation certificate has not come. It came after July 2017. It happened in 2020 or whatever, 2018 or whatever it is. It is after 1st of July 2017 it has happened. So now what is going to happen here? Here also again it is important to look at completion certificate, allocation certificate. Was it for levy, determining levy? It was determining when the tax has to be paid. Levy crystallized because of what? You entering into joint development agreement. What was the definition of the service? Service provided or to be provided. There was an amendment somewhere in 1/6/2007 I think. There was an amendment to amend the law from services provided, service to be provided also. So I have entered into an agreement for a consideration. Have I not got a valid consideration as on that day? In terms of the development right, I have got a DA GPA. If required, I could have assigned it to somebody and I can do off my money and go. Right? So I have got a valid consideration. Service to be provided was also part of a levy. So thereby the levy has suffered under the service tax regime. Time was postponed to allocation agreement. If the allocation agreement is happened in 2018-19, whenever it is there, tax has to be paid based on that service tax, not the GST. Under service tax, you want to take Vasanta Green projects, all other contention, that is all open. Till now, you have not got show cause notice. Time bar has happened. That is also you can consider 5 years also as elapsed. That is under the service tax. Clear? Department contention. Sudhir, please don't look at 141(11)(b, you look at 141(10). C also they will not tell because VAT was not applicable. They are saying you look at 10. See what is that 10 says? If you had entered into a contract prior to the appointed date, but the delivery of that contract service you are doing after the GST date, then you have to pay tax on that. So this is a bit tricky. This is where there is a physical service, one-time service which has been given. Right? Here in this case what is happening? It is continuous, one brick on brick, everything has happened. So you cannot say that it is like one-time service which has been plugged and given here, not within the meaning of continuous supply, but it has been done over a period. So we have to come out of 140, 110, which is the arguments which we have to put in place, right? Then tax implication in case of redevelopment projects. I don't see any different change than what is there for this any original development, except for that they also give, instead of in addition to giving the built up area, they will also pay some money for redevelopment, rental compensation, some money they pay. So what should be the valuation? If you are adopting the value after 1st of April 2019, the first sale value you have adopted, right? There is the story. You have given whatever extra you have given. Notification says it overrides all other things. 14.5 the notification has been given. It says notwithstanding anything contained there, once I define something for this transaction as a valuation, that should be the final valuation. Prior to 1st of April 2019 also, it says if you have taken an open market value of the similar service which you are providing, that is your development right as assessed date, it is considering all the construction service which has been there, again thereby the amount which you are paying to the landowner should not be again added to the valuation. So thereby that is what is there. Any specific issues if it is there in redevelopment project, you have to bring it to my notice, because in Telangana or down in the south we don't have much of a redevelopment project. I don't have much of practical experience in that. Then this your question, sir, what will happen if I am buying the TDR from open market? By some other trader or some other person whose land was acquired, or the authority has given me the development agreement. So here the reverse charge mechanism, it says that if you are taking a development rights, TDR, FSI, whatever it is, if you are taking for a construction of a project by a promoter, the promoter has to pay under reverse charge mechanism from whomever you are purchasing, whether it is from the landowner it is transferring or somebody else it is coming, it doesn't make any difference, you have to pay under reverse charge mechanism. But the challenge is that my land has been acquired, government gave me TDR, right? Because I am not a promoter, no reverse charge mechanism on it, right? And TDR has been given to me. What I have given to him is only a land. I have not provided any service. So supply of land is not subjected. Output is also not subject. Now this TDR sale is there. This I am selling it to non-promoter. Broker is there. I sell it to a broker who will only. I'll finish. He is not a promoter, but he is a broker. Then in which case, what I should do? I am supplying a service. Reverse charge will not apply. Direct charge I have to pay tax. The broker will go to a promoter. He will say, why don't you buy this TDR from me? In which case, who has to pay tax? Promoter. What will happen to this tax which has been paid? Duplication of tax. Right? So this is something which we need to be careful in case of trading in TDR. Yeah. Sorry.
Corporation gives me service which corporation is giving.
Okay.
Which needs to be
Whether it will come under reverse charge mechanism because it is a service received by the government, from the government.
So
So that is
243 GRW will be a
whether we can take an example.
benefit on that.
Correct. Because it's a development, 243.
And
Urban planning is there.
there is another school of thought whether TDR can be treated as an actionable claim and hence goods and hence no ask.
That is also possible. TDR, whether TDR per se there are the things that it is an actionable claim. Second, it is not. It is a part of a benefit arising out of a land. It is that nothing but you have traded the land only, immovable property. So it should not be subjected to tax. Those arguments are very much possible. Yes, sir.
TDR can be even received by the developer also, builder.
Correct.
Their land acquired is, is also acquired by the authorities for road development also, and they are getting the timber.
Correct.
In that case, what is the value?
Promoter is acquiring from whom, sir?
Government is giving. Local authority
Got it.
is
So
acquiring
there is
this
a land
land.
parcel, this portion goes under road cutting.
Road cutting.
On that land itself, the developer is.
Reverse charge mechanism it has to be paid.
But then it is coming from.
Whether it is a consideration, whether it is coming from government is A.
Yeah.
So
Coming from.
I have not purchased it per se, but it is my land has been taken away and it has been compensated. So that, like Sanket is telling, there is one notification, exemption notification where it says service, pure service provided by a government in relation to function entrusted to 243W and 243G, two different serial numbers they have given, panchayat or thing. So that is been given as an exemption. So that is an entry we can claim as an exemption.
That PDR which is issued by the developer, again it is supposed to be sold in the market. Instead of using.
When it is sold, if the purchaser is not a promoter, then forward charge.
Purchaser is promoter,
Then reverse charge he will pay.
he will pay. He, why you say, he.
Through a broker.
No, he is not the broker.
Ah.
Suppose a land owner, the developer himself is getting a PDR from the government. You say now that reverse charge mechanism is not applicable because of that particular circular.
Because he is not a promoter. In your case, what you are saying, one promoter.
He is a
I'll summarize what your case is. I am a promoter. I had a land parcel. Government acquired certain land of mine and they gave me a TDR. Instead of using this TDR for an additional built-up area in that project, I sold it to my other promoter friend. He told I want it and he gave me a good rate and I sold it to him. He made an additional construction there. Because he is a promoter, reverse charge will be paid by him on this. What is the value? Transaction value, rate is 18%. Sir?
जिसको सेल किया अगर वो promoter नहीं है तो.
Forward charge. You charge. Yeah.
We are trying to say that it is aligned to development. It is
Correct.
like that.
Yes, yes.
And where they are referring in the notifications, the language is TDR,
TDR.
transfer of development rights. This is
Yes.
that is the basis we are doing.
Or you differentiate that with this. Differentiate the development right coming in a joint development agreement. You tell this is all belonging this story only. This is this is not a transfer of development right. This is transferable development rights, which is an actionable claim by itself. Then goods is another thing.
And once we go to that both are aligned, can we not also go for an exemption?
Yeah, that is what.
So the larger projects where the land is taken on outright basis, there also TDR is loaded on that.
Correct.
Buying it. So then how do you do the calculation of RCM vis-a-vis the exemption?
Yeah, that is a complication. That is a complication. Yeah. Sir, I'll do one thing, sir. I'll finish off my thing so that we'll have some time for questions. Sorry to keep you on that. So this is on that TDR or FSI bought in the open market. So then you have this long-term lease with the local authorities. I think there was a Mumbai High Court decision in case of Builders Association or something which has come. So they have upheld the levy on that for the service tax. So GST, whether we can differentiate, whether it will upheld, is something which has been there. So here we have an exemption for industrial land. If anything more than 30 years is there, you have to pay. Otherwise, all long-term leases are subjected to tax at 18%. So before I take up the questions, the last one is a revenue sharing agreement. Do we have revenue sharing agreements here? Yes. So instead of having a built-up area share, if I am doing a revenue share, how is it going to work? Purely, this is on the transactional basis, how you are structuring the transaction. Right? There is no one simple answer. This is how it has to happen. There are multiple things which can happen. One is that I enter into a contract with the MOU or something with the landowner, and I will say you and me will together provide a service to customer. You give your land, I will give my construction service. Okay. and whatever the value is there, which will be clearly written in the sale deed or agreement of sale, that because 1 crore is the sale which is happening, and we have an agreement, okay, you'll get 44%, I'll get 56%. So 44 lakhs is towards the land which has to be paid to landowner, and this is the construction service I have to pay, right? If you are structuring like this, amount comes to escrow account. From escrow account, it will be transferred to landowner 44, and 56 will come to my share. Then I have to pay GST on this 56, right? So can I pay at 18% and take input tax credit? Possibly, yes, you could do that, because you are not contracting to transfer the land. You are only a party to a contract where he is contracting to sell the land. You are contracting to do the construction service. So you are eligible to take a deduction. So this is one way of structuring which is possible. The second way of structuring is that you don't do all those things. You sell the entire flats in your name, pay 5% GST if you don't want to take an higher deduction of land value based on the Gujarat High Court. You pay on the 5% on GST, and whatever you are paying to the landowner, you make it as a amount paid towards the purchase of land. So he will not pay GST on the entire unit which you have sold prior to completion. 5% GST is suffered. Hopefully government should be happy. Hopefully, we don't know. They should be happy. So this is the second option which you could structure it. The third option which is structuring it is 100 rupees will come in an escrow account, 44 will go to him, 56 will come to me. I will pay 5% 56, he will also pay 5% 56. Right? Because jointly we have come together. It is not that he is not responsible for construction, I am not responsible for land, whatever it is. We are the two parties, three parties agreement will be there. We are the two parties, the amount is coming, and this is how we are doing a revenue share. So that is, last one is a bit of complication. Either first and two is very easy and easy to convince. Your documentation is very important to come to this conclusion. So this completes my talk on GST. So two things, anything to do with TDR and redevelopment. I may ask you a lot of facts to give the answer, because in Telangana, Hyderabad, we have unlimited FSI. There is no question of TDR at all. So I think here maximum you can do 1.1, 1.1:3. So we do 5.5, 1:5.5. So for us is only a height restriction based on the width of the road. I'm not coming. Yes, sir. I am open for questions now, sir. Reassignment of development rights, tell me, sir.
Promoter has got a development right.
Correct.
Assigning those rights to some other developer.
Ah. This is with the landowner only, na? Correct. With the I enter into a JDA with A, so now I have the entire right. So for some reason I don't want to go ahead with the project. Sanket, my fellow builder, will come and he will say, you give it to me, I will do the project. So I am assigning this entire right to him. While assigning this entire right to him in general, he will not give me money. What he will say, so we will do one thing, you are getting 60%, 40% anyway we have to give to landowner, we cannot touch. We will give 40%, I will give you 10% of the constructed area, 50% I am going to keep. Generally that is how they do this particular transaction.
He may give money also.
So now money also is possible. So now what is that? Have I not? What is that? I am transferring it. I am transferring the right over that joint development agreement which has been there. I am not transferring any sale of land. Immovable property transaction is not happening. Unless until we can say this right is also a benefit arising of the land, it also treated as an immovable property. That argument we can take. Subject to that argument, whatever the consideration I am giving, I have to charge GST on that. So it is not a construction of a complex service, thereby I have to pay GST at 18%. Right? And the developer. So that is also one of the things which I did not cover. On this development right, whether the landowner, whether the developer is eligible for input tax credit. either paid under RCM or whatever it is? Is he eligible for input tax credit? Section 17 subsection 5 says that any supply of goods or services which is used for construction is not eligible. So development right, can I say it is an input for construction? If I don't, is it not an illegal construction if I am doing, if I don't have a development rights? So this is also one of the threat which is there, that RCM whatever you are paying, residential anyway you are not going to get the credit, 5% scheme mein. You get exemption, majority you will do. In commercial, when you are paying tax under reverse charge mechanism, there is also a doubt whether the eligibility of credit will be there. So same, now you are doing an assignment to second developer, right? You are charging this tax to him, whether he will be eligible for credit is something again will be disputed.
Here there is two arguments. One is that if you say what I pay under RCM for commercial project and not eligible for credit, then why? Because it is related to land and not related to construction. Then if it is related to land, then no RCM should only kick in because
No tax at all should come because it is a land.
it is land. If department
Once you are accepting you are paying, then it is what?
rights. And those rights, if I would have not got the rights, I would have not been able to do construction. So effectively, it is for my construction service. That's the argument.
Yeah.
And where department is again coming back and saying for the land, you have taken 1/3 deduction.
Correct.
So then you don't get credit of the development rights because
Correct.
those are related. So
Correct.
it's a two-way
Two grounds for to deny the credit.
denial.
But this is a very grey area, and value quantum of this is going to be huge. The value in each project is going to be huge, but this is an open area. So thank you, sir. I hope I have answered your question.
To summarize
Yes, sir.
sir's question.
Yeah.
So in case of reassignment of the development rights,
Hmm.
the person who is actually developing the project,
Hmm.
the second promoter,
Hmm.
he will be paying on that 40% which will be given to the landowner.
Correct.
Right? And for the 10%, this first promoter will be charging 18% to the second promoter.
He gets a consideration in terms of 10% of the built-up area. Yes.
So he will be charging.
You have to make an open market value of that 10. Okay. So that will be output service which you are giving it to developer 2. Okay. In exchange, instead of giving him money, he has given the flats. Now these flats again you are selling it to customers. So tax has to be paid. Whether I'll get 5% or 1.5% there. Who I should be? I should be a promoter. Who will apply RERA registration in this? Second developer. So how much rate I have to pay here? Maybe 18%.
And then I can set etc. whatever I.
That again the same, the construction, used for construction, that challenge. Subject to that you can. So I would prefer to say that I am not a promoter. I prefer to say I am not a promoter. Promoter is developer too. He is a landowner promoter. I am there in the chain, we are assigned it. You cannot call me a promoter in this. And when I am selling it, I am only like any other investor who is buying and selling. He need not take any RERA registration. That, and I will pay not at 5% rate, I will pay at full and take the income tax. Yes sir, any other questions? Yeah.
In case of landowner, once units have been allocated, the landlord will pay GST ISS, right?
For the landowner, if you are allocating the unit, the GST on construction service will trigger.
For landowner has to take the registration, right?
Landowner also should have been taken a registration if he wants to take input tax credit.
The only issue here is the other income of the landowners coming under the GST.
Yes. He may be having a very small rental income, commercial or whatever. All those things will come.
If it is agriculture, he has to report the receipts.
That also has to. It opens up. So that's the reason many of the landowners says I don't want to take the credit. I don't want to take registration. So one of the peculiar thing, at least in Hyderabad, people are doing is this landowner is saying I don't have any marketing capability. I don't want to retain anything. I also want to sell. Give me a minimum guarantee rate. So he'll say मैं तेरे को sell करवा के दे देता हूँ. Don't worry. So then what is there is happening? Okay, the customer is there. He's saying this is a landowner share. You have to remit the money directly to the 5,000 rupees. You directly remit to the landowner account. He is also seeing okay development agreement. The allocation is happening to landowner. It's all okay. He'll get it. GST you directly pay to me. So what he is doing, this GST is taking it as a construction service provided to developer and remitting it. So developer is happy, his discharge is liability. Now department is going to the landowner. You are saying where is the transaction number, whatever 6 or something which I had put. Where is the tax on that transaction number? 4. Where is the GST? You have not paid. So if you are not taking registration, this problem. If you take a registration, you have to give all those others.
Is there any escape in
No.
No.
Landlord is supposed to be pay the tax.
Escape is you don't.
This is not a challenge.
Ha. After 1st of April 2019, you don't sell anything up to completion certificate. Make only after completion certificate. Stay till then. Then no need to take it.
The landlord is supposed to sell after completion.
After completion, there is no problem. Whatever is charging you will become a cost. You recover that amount as a part of your selling price, not charging GST.
Basically, the forward charge from builder to landowner in the case of allocation and RCM in the case of builder for TDR. Both will arise at the same point of time.
At the time of completion, sir.
Time of completion or allocation of units?
That is what I told you, different things. Na? If it is RCM, we are talking about 1st of April 2019 onwards. Thereby, it is on the completion certificate. Completion certificate is the latest date. Then again they amended it. If you want to pay it early, you pay it and take credit, no problem.
Because there is a time here because
Yeah.
landowner says before CC.
Yes. Yes, sir.
I just want to get the clarification on the questions. Just a quick recap of the session. First one is when the RCM should be paid, it is on the completion. Okay. If the development agreement is entered after 1st April 2019. Okay. And whatever construction area given by the developer to the landowner, on the construction services, GST should be paid.
Correct.
And the input tax credit is available to
To the landowner.
and whenever he is paying whenever he is selling those flats,
He can
before
take input tax
completion,
credit.
he will claim input tax credit against 1% or 5% he is paying.
Correct. But only one condition, his sale price should not be less than what has been valued. Say first sale in the project I have taken it as 5,000 rupees. The landowner cannot sell less than 5,000.
So there has to be a
That's
value.
okay.
He can sell it at 6,000, not a problem.
Okay.
Same rate also he can sell, but he cannot sell it at 4,999. Not even a rupee less.
But when that GST should be paid by the
GST, what the
builder.
law says is the last date for paying GST is your completion certificate. If you want, you can pay it early. So what? Landowner share only. You can pay early also. So what mechanism we have designed for our clients is that the landowner has to inform the developer on the last day of the month. Right? So we are in 31st of March, he is going to call and say that I have collected from my clients, customers today, landowner customer, 1 lakh rupees GST in this month I have collected. So 31st of March, developer will issue an invoice, tax invoice for him for 1 lakh rupees. GST amount I am talking about. Value anyway he is not going to pay, he is going to nullify 1 lakh rupees GST amount, he is going to give it. So and upload it in the GSTR 1 by 11th. 14th developer landowner is checking whether it is coming as 2A, 2B. If it is coming as 2B, that 1 lakh rupees he is transferring to developer. When he is filing the return on 3B, he say output tax 1 lakh, input tax 1 lakh, net payment in cash is 0. Developer no input tax credit because residential complex, whatever 1 lakh rupees he makes a challan and pays to the government. This is the procedure we have adopted. By chance it is not coming in 2B, he will not pay 1 lakh rupees. Then it is a cost of the developer. And if you are not intimating it in this month, I will not be able to give you a credit because I have to issue an invoice as on 31st. So that is the mechanism which we have.
And when the RCM has to be paid, that same is to be reported by the supplier in his GSTR1 to the recipient of
At
that
the completion
service.
certificate, yes.
So when he should report that?
Completion certificate at the time of
At
completion.
the time of completion,
Yeah.
GSTR1.
See, in residential complex, you need not pay before RCM because anyway you don't get the credit. You take the last date only and pay. Why you will waste interest on that? In commercial projects, if you want to take input tax credit of that, based on your sales proportion, you keep on issuing a self-invoice. For RCM, you are supposed to give self-invoice. The provision is there, na? So you give a self-invoice on yourself. In that month, proportionately, you pay reverse charge under RCM. All that entire money should be matching with the total RCM I was supposed.
But supplier don't have to issue the invoice.
Output invoice by the landowner need not be given.
Need not be given.
Thank you, sir.
Any other question?
I think we are dot on time. I thank you everybody for having a patience listening, and I thank the Pimpri Chinchwad branch for having me here and giving me an opportunity to share my thoughts. Thank you all.
So now we come to the pleasant task of proposing a vote of thanks. So it gives me pleasure to propose this vote of thanks on behalf of Pimpri Chinchwad branch of WIRC of ICAI. Sudhir sir, as he said, has been associated with us since 2019. I remember when Santosh Sancheti was the chairman, he had come to the branch. The same team was there, I think. Sanket Shah was there, Sudhir sir was there, and Ravi Somani. So they had again that time also given a lecture, seminar on GST. And today it is like we are coming full circle, and we are having the same seminar in 2023. So his topic that was given to him was joint development and FSI, and he told everything in simple language, which could be understood to the chartered accountants and the layman as well. And he was very to the point in whatever he said, and due to that, I think the understanding of the participants has increased more, and the question and answers will still continue. We can have offline question and answers with all the participants during lunchtime. So thank you, Sudhir sir, thank you all, and thank you to the participants for patiently listening. Thank you. So the break for only half an hour for our lunch, and then we'll start again.